Okay, perfect. Welcome to the webinar then. Our sound check is perfect. Welcome to everybody. A lot of people here from many parts of the world, from Romania, South Africa, Portugal, Singapore. Nice to have you here and for your support. Some of you maybe don't know much about supply and demand, and many of you, I'm sure that you will know. Hello, Henry. But we forgot many times we forget about a very simple thing, which is the basics. We have to go back to the basics, and I know that for a fact because apart from the set and forget private community, there is the Forest Factory free community, and there I'm trying to give support as much as I can. As you know, I'm trying to reply to all emails there, and what I can see there is that people are not reading post number 1 where the rules are, and it takes time, it takes a hard work, it takes a lot of testing as specified in post number 1, and you have to do it yourself. No matter, like today I posted a message there, no matter how, if I gave you a piece of paper with all the secrets about supply and demand, all that you have to do, you would not be able to follow the rules because your brain is not ready for that. I mean, that's the way the human brain works. You need to create habits, and habits are created by repetition. And the only person that can repeat one trade and set up and rule over and over and over again until you die, I mean, is yourself. Nobody else can do it. So if you don't work hard to test these rules, or no matter what other rules or strategy you are trying to test and get proficient at, if you don't do that, you will never ever get the habit and the confidence to trade the rules. It's just impossible. Okay, if you wanted to learn Spanish, I'm sorry for this introduction because I read that so much and see the charts, and not even there but also on the private forum sometimes, but it's normal. I mean, we have to go through that stage, so you have to do that. I mean, if you want to learn a language, you will learn Spanish, and it is my native language. Will you learn Spanish by reading a grammar book or the dictionary 100 times? No, you will not, because that will give you maybe a lot of vocabulary, but you will not be able to connect all the words to make sentences that are legible and understandable and comprehensible, and that takes years to learn a language, or to learn to dance, or to learn a profession, so a craft, whatever. So this is the same thing. So this is why 95% or more of traders do not succeed at doing what they are trying to do to be profitable, because they don't try hard enough. Believing is not enough. Believing has to be accompanied by a really hard work, and that is the same in all fields of life. Okay, so sorry about this brief introduction, because I believe most people don't get what they want in life because they, first of all, don't know what they want. That's the only reason why people don't get what they want. So let's try, after all this, sorry for, this is not going against or for anybody in anybody specific. I mean, it's just a general thing. Okay, this is how we work, and we have to be aware of our limitations are as human beings. Greetings, Hugh, welcome. Hugh, Gennady, Henry, Jim, Mike, Daniel, a lot of people here. Thanks for your support. So are we ready? So we are going to start with the basics, which are not basic. I mean, we just need two objects, two features on a chart in order to make our analysis, and that is a rectangle and a trend line. And that's all we need. We don't need MACD, we don't need RSI, we don't need CCI, we don't need Bollinger, EMA crosses, anything else. We don't need anything else. That's simple. Okay? So let's try to analyze one pair from top-down analysis from one pair. I don't know, the first one that people put right on the questions pop-up window. Okay, but something which is not so popular like the euro dollar. Okay, so something else. People say euro dollar, pound dollar. Okay, dollar yen. Okay, no, dollar yen. Mike said dollar yen. Okay, it's different. Okay, people just want the majors. the euro, the pound, and all that. Well, let's start with the dollar yen. Well, Mike mentioned it, okay, and we'll have time to go through others, okay. So let's start with the dollar yen from scratch. Let me open it. Dollar yen is over here, okay. So let's start from this chart on the monthly, okay. So first of all, we need to look at the chart, and there's one thing that I'll always repeat over and over and over, and this comes with experience, okay. When you look at the chart, and this is something very important, and you take more than 10 seconds or 5 seconds to decide which is the trend of that chart, forget about that one, because you will be thinking too much, okay. So it has to be really obvious. When you look at this, what is the trend on the monthly? Isn't it clearly down? Yes, it is clearly down. But when you look at areas when prices like, I don't know, let me take a look at the daily here. What is the trend here on the daily? Can anybody tell me? This is just a quick thing before we start. This is consolidation. Okay, we don't have a clear direction there. So when you look at the chart and you see something which is not telling you a clear direction, forget about that one. There are 20, 30, 40 pairs. You can trade futures, you can trade CFD indexes. Forget about that one. I mean, we are talking always with the swing and position perspective. Okay, we are not talking about intraday or scalping. That's a different thing. Whoever wants to do that is perfect. But I'm talking about position and swing trading, where you don't have to be worrying about the levels and looking at the screen all day long. So what is the trend now on the monthly? How can we assess the trend on the monthly? Anybody? The trend is up. But why is the trend up? Because, okay, you see that these candles are up, okay? Bullish candles, and okay, this is up. But here we also have a like candles up, and here we have candles down, but doesn't mean we have a downtrend. Okay, so like Hugh said, or Alad as well, and Chris, 2V patterns, 2 valleys. So once we define a trend, when we do have supply be an uptrend is defined with supply and demand rules into consideration when demand areas are respected and supply areas are removed. So when you look here at the chart, do we have, this is supply, this is supply, this is supply. So in the past we did have this trend line. So areas of supply have been respected all the time, okay, until we got this supply area removed. So right there at this point in time, down there on the monthly, I don't know what happens there. So there, right there, okay, it is where this trend line was broken. So there was a change in the direction. Okay, but once we break this trend line down here, this candle, as per the rules in post number 1 first factory and the rules that I have laid out in order, this candle there, this full open high close and low high open close candle confirms that the downtrend is no longer valid. That doesn't mean that this is an uptrend. It just means that we have entered a consolidation stage where we have broken the trend line, but we have not yet removed any supply area, okay, and we don't have the possibility of drawing an ascending trend line because we do not have 2 valleys. So in order to have an uptrend, we need either to remove at least 2 areas of supply or create a valley. That's one of the rules which is on all the posts. Okay, so here, what do we have here? Let's start from here. Okay, this is the area where markets changed dynamics. It hit the all-time low, I believe, at least on this chart, all-time low, and after we broke this trend line, then we created a brand new area of demand, and then price hit there. So we're going to analyze all this. Okay, so let me do this. At this moment in time, let me describe this. Wasn't this the trend line at the moment where that happened? I mean, we had a valley and another valley. Now what? CP pattern there, another valley, and then another valley. So at the time when price was there, you can interrupt me at any moment if you have any questions. Okay. So here we do have this valley, obvious valley. This is a drop, a base, and a rally that made a higher high. So this is a V shape. The first leg drops. This is the basing, and then rally, base, rally, base, rally. We do have like 2-3 CP patterns of demand, and then we do have this rejection there, and then price rallies. So once we do have this valley and this second valley that made a higher high than the previous first valley, second leg, then we do have the possibility of drawing a trend line. Never before. Is that understood? We do not take into account CP patterns, continuation patterns, in order to draw trend lines. We don't do this. We don't do this. Never. Ever. Because this is a continuation pattern. Okay? So we don't do that. We wait for that valley to be formed before we can say we have an uptrend on the monthly. In this case, a monthly, but practice fractal. So no matter what you do, it will be repeatable applicable to all time frames. Okay. Roman is asking, do we plan any trade on 4 hour if we have consolidation in higher time frame on daily? You have to wait for confirmation, Roman. If we are trading on the daily and we have consolidation there, you need a trend at least on the 4 hour and direction on the daily. We are trading. I'm trading, and I'm trying to encourage people to trade with the daily trend. If we are in consolidation, you have to trade at the extremes and wait for a confirmation type of trade. Brand new demand or supply being formed in higher time frames touches. Okay, Roman? So once we do have this, okay, we are allowed to draw this trend line. In the beginning, it was like this. It wasn't like that. I mean, we do have this trend line here broken. Okay, this is broken, a trend line, and then we rally higher, and this candle there, which is the low, the open, the close, and the high, has solidly broken the trend line. And there is a rule. We cannot break that rule. Okay, you have to pay attention. Welcome, Roman. That we are making lower lows and lower lows. So this is a trend line. Even 1 pip would make the trend line draw like this. If we hadn't broken that area, overshot that area about 1 single pip, then we are not allowed to draw this as a peak. Okay, we need to break that area by 0.1. I mean the minimum distance for a pip. So this is valid. The trend line is broken. Now that doesn't mean that we are in an uptrend. We are in consolidation. So once we do have 1 area of supply and 2 areas of supply removed, as you can see there, then we do have an uptrend. But that doesn't give us permission to do this. This is not possible. Why isn't this trend line possible? Can anybody tell me? I mentioned it before. What do we need in order to draw a trend line? A valid trend line. We need 2, yes, that's it, 2 valleys. 2 valleys. And remove supply. So there it is. This is a trend line break, and then we do have 1 valley here, there. This is the V shape, okay, as I'm pointing with my pointer. But this is not a valley. This is a rally base, rally base, rally. This is a CP pattern, continuation pattern. We don't use the continuation patterns in order to draw a trend line. Okay, it needs to remove either 2 opposing supply areas or create a valid CP pattern, a valid valley, 2 valleys. So on the way up, since the trend line is broken, then we take levels of demand, CP patterns of demand. If we have hit a higher time frame area, which is here, we hit the lowest low in history, and then prices start rejecting, so we are allowed to trade long now, because now the trend on the monthly is changing. So on the daily and 4-hour and intraday, you will be having trades all the way up. Okay, that's the idea. But that's another thing. That's looking for trade setups, and we are trying to learn here how to mechanically draw a trend line and supply and demand zones, because that is the key. I mean, that is the wireframe of the strategy. If you don't know how to draw trend lines correctly, if you don't know how to draw supply and demand zones, CP patterns, then the other rules are useless, because you need those two basic concepts to be really in your mind and learn them by heart and practice a lot in order to be proficient at drawing them. Okay, so Jack is asking, Alfonso, when a complete candle breaks the trend line and then subsequently another candle forms and drop below the trend line, based on the rules, what can we do? I mean, if this breaks the candle, the trend line, and then this one drops down there, Jack, right, the next one. Below the trend line. I mean, if it drops below the trend line, then you have to assess this. I mean, Jack, this is demand area. Why is it demand? Because it broke trend line, it removed supply there, and now we do have a valley. So this is an area of demand. So when price drops down there and it breaks that trend line and then subsequently drops into that area, this is demand. You cannot sell. You have to wait. If there's a great level of demand there on the daily, 4-hour, and all that, then you take it. If there is not, then you wait to go long, but don't go short, because you could be selling against higher time frame demand area. You have to wait for this to be broken, or for a brand new area of demand there, or if it exceeds already and is great, then you take it. Is that understood? That's always the same thing. Do not try to sell into higher time frame demand areas, and do not try to buy into higher time frame supply areas. Chris is asking, say that again, please. What allows you to trade long on the way up before the uptrend is confirmed? The CP patterns class, Chris. Okay. Now price, the trend line is broken on the monthly, and down we rally there, and on the way up we will have daily levels of demand and 4-hour levels of demand that you will treat with the daily trend lines rules and the 4-hour trend line rules. So let me show you an example here. So let me try here. Let me see what happens here. Okay, this is a vertical line, and this is supply there. Okay, let me do this. Let me change this to another color so we can see the lines. There it is. Yeah, I will scrunch it up here. Is that better? So this is a monthly. So the thing is that we do have this hit down there. So when price starts rallying from there, yes, Chris, consolidation on the monthly allows to trade in both directions. Yes, if you have the daily trend. Okay, just try to trade with the daily trend always. So let me look at the daily here. Okay, now I have to use there. So look at what happened here. Okay, so here we hit that area of demand on the monthly. You see it dropped there, and what happened there? It dropped down there, and look what happened here. The daily trend line. We've got a peak, another peak there, another peak there. So we connect the latest peaks there. There's the peak, and then we do have 1, 2, 3, 4 CP patterns. After 3 CP patterns, there is a rule that says that you are allowed to draw an aggressive trend line. Okay, this is very, very, very important. Okay, this is an aggressive trend line, and this aggressive trend line will be taken into account if and only if we have hit a higher time frame than the time frame where we have detected the 3 CP patterns. So when we hit that area down there and we break the trend line, then all these areas become demand. As you can see, this demand area removed the supply, and then the supply and the supply. 1, 2, 3 areas of supply removed. And what caused the removal of all these areas of supply? Can anybody tell me? What did it cause? What area did cause the removal of all these areas, which were great? But if you try to sell here, you would be trying to sell against higher time frames demand areas. What does it mean? That you have lower odds. You are selling into higher time frame demand areas, and that is not higher probability. That is not a sound strategy, and you will be doomed to failure. As simple as that. That doesn't mean that these levels could work. Of course they could. This is all a games number. Okay? So you just play the you just play the game. But try to play the game with as many odds on your side as possible. So Hugh is saying the CP demand zone was the cause, and the origin of was the lower drop base rally. So look at this over here. This is the extreme. Okay, right there we do have the extreme. Then we do have another CP pattern there. Okay, so when you look at that, what is the cause of that whole rally? This one is the origin of all that. This one also removed areas there. Okay, but once we hit that area here, we've got a weekly area of supply, so we are not going to enter into that discussion now because a more advanced thing, but it's all the same thing, because if we hit a weekly area of supply there, we are not allowed to trade in the middle. We have to go to the extremes. Okay, so, and this webinar is about drawing trend lines and drawing zones. Okay, drawing trend and zones. So we can't cover all the strategy in 1 hour and a half, 2 hours, just impossible. So but I just want you to know and to see what is going what is going here, what is going on here. Elad is asking if I can repeat the aggressive trend line explanation. We are allowed to draw an aggressive trend line when we do have 3 or more CP patterns. This is 1, 2, 3, 4. If you take all these as 1, this is 1, 2, and 3. That's the rule. Okay, so here, same. 1, 2, 3. The trend line will be this. Okay, but did we hit a higher time frame area of demand? I don't think so. So price kept on dropping until when? Until it hit a higher time frame area of demand, which is down there. And that's it. That's why this is being working like that. Okay, so let me go back to this. You're welcome, Elad. So since this is the extreme, and we hit there is a supply area there on the weekly. All this is a weekly area. Okay, a lot of trading here in the zone, so do not try to buy against that when price is dropping heavily from there. Do not try to do that. Just wait for a confirmation here. CP patterns are great if we have not hit a higher time frame area of supply, and there is a weekly area of supply because of the numbers of candles there. So there are more than 5-6 candles. There is a weekly area of supply. CP pattern on the weekly. So if the CP pattern is the weekly is down and the CP pattern of supply here is holding, do not try to buy there because you will have probably lots of losses. So wait for the extreme, but on the way down we will have intraday trades. Okay, now we are waiting from the extreme that price drops there and then that level holds and then rallies, and it rallies all the way up. Okay, so what I'm trying to see here as well is that these things happen a lot. Okay, these things happen a lot. What would we have had a loss down there if we wanted to buy? The level is broken. Okay, yeah, here, but I'm waiting for others to say. Chris said no. What good prevent us from having a loss here or not? What do we have? What parameter are we using on this strategy in order to avoid this overshooting on the levels? We have the, yeah, everybody's saying it, the wiggle room. So for a daily level, we want, on a major, we want at least 25 pips of wiggle room. Minimum 25. And if you've got level on top of level there, try to go to the extreme or add more wiggle room, or wait for a confirmation. That's all you can do. There's nothing you can do. The wiggle room will protect you. So here, from there to there, we do have 13 pips. So that is not a loss, because we would have had our stop loss right there. And that happens a lot. Okay? So as you can see here, the price did not close underneath that level. We are into higher time frame areas of demand, and that is a signal for many other traders that trade support and resistance, and this pink candle will trigger an entry for them. Okay, and this is what happened, but this is not what we are doing here. Okay, so we are trading supply and demand zones and not candlestick patterns as they close. That's another thing. So now price rally from there, and we start having another trend line. So we do have this valley is obvious, as you can see. Okay, isn't this valley obvious? A drop, a base, and a rally, and now a drop, a base, and a rally. So now we do have another trend there. Okay, do you understand why we do have that trend line there? So now that level has been working, and now we do have another level there, which is the origin of it all. Okay, so now we do have this trend line, and this is a CP pattern, and this is another CP pattern. So we do have 1, 2, 3 CP patterns. Okay, 1, 2, and 3. So once we do have 1, 2, and 3, then this is what we have: a more aggressive trend line drawn, linking the 3 CP patterns. Okay, once we do have another valley created on the daily, then we join the previous valley, okay, there with this valley, the origin, this valley, and then this valley, and this could be easily a weekly area, a weekly, 2 valleys on the weekly. So now we do have a drop, base, and a rally. Drop, base, rally, base, rally, base, rally, base, rally. What is this? Is it overextended or is it not? Do we have more than 3 CP patterns of demand? Yes, we do. So once we do have more than 3 CP patterns of demand, we draw an aggressive trend line. Okay, this CP pattern area worked for some time. It even gave 100 pips. Okay, but we have to see what is going on here on the left, but we are not doing that. Okay, now we are just trying to show you how to draw trend lines. Okay, then on another webinars we will see the interrelationship between all different time frames and how they all link together. Okay, so now this is the trend line. This is what we have now: rally, base, drop, rally, base, drop, 1 CP, 2 CP, 3 CPs. So first of all, we would have this trend line. Then, since we do have several areas, CP pattern supply zones, we've got one area there, but this is a peak. So peak and peak, we join, drop, base, rally, so drop, base, drop, base, drop. Okay, so now we do have 1, 2 CP patterns, 3 CP patterns, and we do have another peak there. So we join and make a more aggressive trend line. Okay, he was asking, would it be wise to not buy highest CP demand zone after 3 CP trend line break or overbought and market needs to sell off? Yes. So once we do have this overextended period, buying CP pattern is not a good thing. A CP pattern is good at the beginning of a movement, not at the end of a movement. We don't know if it is at the end. Let me correct this sentence. After a big imbalance in price, after a lot of buyers have been into the market and price is overextended with CP patterns, that means that the spring, I mean, it's overextended and it will snap back to the origin once price starts to sell off. And this is what happened. It went right to the origin of the whole imbalance, right down there, and then price rallied again. Okay, so once we are too high in the curve, once we have more than 3 patterns, once we have many CP patterns in a row and overbought and overextended, price will normally revert to the mean and will snap back to its origin. So you should forget about any CP patterns on the way up and try to even go counter trend once you do have a trend on the daily. And there I'm sure that we're 4-hour trades on the way down, but we are not into finding trades now. We are trying to show you how to draw trend lines and areas of supply and demand. Okay, like Chris said, a break of the trend line invalidates CPs. That is one of the rules as well. Post number 1, remember that. It's all there, but it's very easy when me or somebody else shows you a chart, but it's not easy when you have to do it yourself. This is why I encourage you to test and test and test, not for 1 week, but for months. Not this strategy, but any other strategy. Do not believe what I do or what I say. Yes, believe what you do and what you test, not what me or somebody else does. So John is saying, okay, unless a flip zone has occurred. That's true, John, but that's another lesson. Okay, so I'm just trying to draw all the trend lines right now. Okay, so we're going to concentrate on the first part of the this webinar. We're going to concentrate on the trend lines. So you will be able to review this video over and over and over, and then on the second half we're going to concentrate on drawing levels. Okay. Philippe is asking, 250 moving average is used widely in the markets to determine the mean. Yes, maybe, Philippe, but we are not using that. I mean, you can use 250, 150, 20, whatever. I mean, those are lagging indicators. That's all. So if you want to use that EMA or moving average, you have to conduct hundreds and hundreds of tests in order to get a rule. So you want to use that one, use it, but test it. Okay, it's not part of the strategy. The only one which is part of the strategy is the 20 EMA, and we use it as confluence. It does not, 20 EMA does not negate a trade and does not give you permission to take a trade. It's just a way to confluence, to have another odds enhancer. That's all. But we could easily remove it. It's not useful. Okay, but only as confluence. So now that we do have this drop in price, okay, now we hit this area there of demand, all that, and we start to rally. We got a drop base and a rally, base and a rally, base and a rally, and then we've got several areas there. So now that we do have that, we will not be able to draw a trend line until we are right there. 2 valleys. But on the way up, we do have 1, 2, 3 CP patterns. So on the way up, we will be able to draw that as aggressive. So that invalidates this level. Well, this level is not a 2-to-1 level, so the basing is not good. It was overshot a little bit. So if anything, you wait for confirmation, but not a sell and forget type of trade. Down there, yes. Down there, yes. It's the extreme and value levels. This one level remove 1, 2, 3, and even 4. Okay, but there we stayed there. Price dropped from there, and then once we drop down there, flip zone on the daily. Yes, Hugh. So there now we rally higher, and now we do have one valley composed of several CP patterns. It doesn't matter. We've got a V shape, and then we've got another V shape here. So we are allowed to take this one. Okay. So we draw this V shape. First leg basing second leg. First leg basing second leg. The second leg made a higher high than the first valley's second leg. That provides the possibility of drawing a trend line. And this is what happens. Okay? then there's a CP pattern there that would have been a trade there, okay? But and then price drops down there, and we are now allowed to do this. Remember, we are just drawing trend lines. We are not looking for trade setups or anything. Okay, so there we have. Okay, now we do have this valley and then this other valley. And once we do have, we always have to connect the latest two valleys or three CP patterns on the daily, because when that changes, you will have to wait for price to drop lower into higher time frames areas of demand, or go counter trend if you are a counter trend trader. Okay, this is the way it works. So if you do this, okay, is this a valid trend line? I'm asking. Look at that. Can anybody tell me? Is it valid on the daily?